Ladies and gentlemen, AMC is getting severely concerning to me, and especially right now with the current prices at these record lows, should bankruptcy concerns really be a question, especially with this liquidity crunch that they're in, trying to raise a lot of money in expense of the shareholders by bringing severe dilution to the common stock. AMC closes at another record low, down another 12% on the day. Short interest remains very high. These shorts are killing it right now. So really with AMC, we need to discuss some really important things. So let's get into the video. Of course, I'm not a financial advisor, just doing research and sharing it with you guys. And hit that like button, subscribe for daily videos, and let's get into it. But AMC, you see right here, closes at $7.18. Now, if we take the reverse stock, or the reverse stock basically split price adjusted price, that's 71 cents. And what this means, basically, remember, for that 10-for-1 reverse stock split, if you had 10 shares, now you have one. And this was a way to basically try to boost the share price for the common stock in order to try to bring liquidity for refinancing, repayment of loans, and especially to try to pay off some of the debt before some of the maturity dates do hit. Now, AMC at $7.18 is at these all-time lows. And one thing that I really want to talk about in this video is the amount of cash burning that AMC has really gone through in fiscal year of 2023. And specifically, if we look at that right here, in the first 6 months of fiscal year 2023, AMC actually has lost $299 million in free cash flow. And basically where it sits right now is that for every dollar in revenue that it does make, AMC actually loses 13 cents in free cash flow. And considering this high percentage of cash burning, it was really only a question of time until they needed to find a way to raise capital. And that's what we're seeing right now, especially with the agreement that we saw that was kind of went through the whole court system in order to sell those 40 million shares of the common stock. And after this announcement came out, everybody knows that AMC really tanked in its share price and dropped over 40. We're talking almost nearly 50% now in just a matter of the last few weeks. So the amount that AMC has dropped in terms of valuation really is shocking, especially since they're trying to raise money. Now, assuming that AMC actually sold these shares at the price of around at $8.60, depending if they sold all the shares right when they were issued, the ability to sell those 40 million shares, this could potentially be about $345 million in actual cash. Now, this is assuming the AMC price won't drop any further, even though it already has. We saw it at 718. So the question is, how low is it going to go, especially after the weekend is done? And the size of equity that this does bring in comparison is about 25% of AMC's current market cap. That is pretty shocking, the fact that they're selling the amount of equity equivalent to 25% of the market cap of the actual stock. And one thing that's not changing is the short interest. Now, this is older data. August 15th has been updated as quickly, but short interest ratio of 33% is very high, especially for any type of stock. And looking at its valuation right now and looking at the risks that are associated, you have a cash that's burning at the speed of light. You have a dilution of the common shares. You have selling, trying to raise liquidity as much as you can, and you also have the price that still continues to go down as the shares shorts are probably increasing the percentage, and you also have more people that are basically winning if they're buying puts, if they're shorting the stock. So talking about that, people asking, hey, is a short squeeze still going to happen? We talk about this because, especially since this was a big coin terminology, short squeeze in 2021 when everybody was talking about this, of course, GameStop, AMC. Now, the question is, yes, there's always a possibility, especially with something like this. AMC could go through a short squeeze. However, that is highly speculative and would have to basically be set up in a way and driven by a very speculative type of behavior. And with that being said, it could be highly unlikely that a short squeeze is actually going to happen, especially with the severe dilution that we have seen. So the fact that we have these 40 million shares that cause severe dilution, short interest is continuing to increase, price is still decreasing at a quick rate, and with the amount of money, is it going to be enough in terms of revenue to save it? Now, I don't know, because there is a cash burning crisis. Like I said, they are losing 13 cents for every dollar that they make. So AMC is really in a pinch right now in the terms of the fact that anytime they have to try to save or basically raise any liquidity, it's at the expense of the shareholders. And the shareholders have really been a foundational, and they have been loyal shareholders to this stock throughout the previous few years. So where AMC does go here in the near future, I think will only be a matter of time. But if there are bankruptcy concerns, I don't think that is necessarily, I want to say, unbelievable to put on the table. I think everybody might be raising that as possible red flags if that is down in the future. Now, it'll depend what happens with AMC, especially, hopefully, we do have some great movies that are coming out. We've talked about the Swift movie that should bring lots of revenue to AMC. Is this enough to save it, though? That's a big question. That's only going to be answered with time. Nobody has that true answer. Take care, peace out, and I'll catch you guys later.